I'd like to introduce to the board and to those present the lady that Evelyn just spoke of, Ms. Erica Brown from Martin Stone. Ms. Brown, if you'll please come forward, please, ma'am. Ladies and gentlemen, you'll find a comprehensive annual financial report in front of you. Ms. Brown, welcome. Thank you for what you and your firm do for the county and the citizens also. Well, if Evelyn brags on you, that's a good thing. Did you earn our little peeping? Ms. Brown, welcome.
Thank you. Thank you, Commissioners, for allowing me to be here today and present to you your 2010 audited financial statement. We're just going to go over some highlights and a few discussion points. I wanted to start off by saying that we did issue an unqualified audit opinion, which is the best opinion that you can get. We had no findings or question costs, and that's in regards to your compliance, which is in a separate packet apart from your CAPR. It's a smaller packet that you have. And we had no material internal control weaknesses identified. And as you know, we just talked about it, but we have very cooperative staff. Evelyn and all her staff are very helpful and prepared for us, and that also makes my job easier. So I appreciate that. I'm going to talk a little bit about the audit process. These are the 4 building blocks of the audit. The audit is a year-round process. We start our planning and risk assessment for your audit as soon as we finish up the audit that we're under. We're in constant contact with Evelyn and her staff and reading your board minutes to keep up to date on your happenings and things that are going on. And then in the spring, we come out and do interim procedures. This is where we look at your internal controls and we do some test document testing. And then our final field work is done sometime in September, and this is when we start redraft your financial statement. Here we look at a summary of your general fund. This compares your revenue and your expenses for 2009 and 2010. Our revenues decreased a little over 3%, and our expenditures decreased a little over 6%. And we're going to discuss this in detail in the next few slides. Talk a little bit about fund balance. Your fund balance serves as a measure of the county's financial resources available. If you take your assets plus your liabilities, you'll arrive at your fund balance. And there are 3 classifications of fund balance: reserved, unreserved designated, and unreserved undesignated. And your reserved classification is reserved by outside parties, third parties. Your unreserved but designated are items that have been designated by the board for specific purposes. And then you have your unreserved undesignated, which is available. Here we look at our total fund balance for your general fund over the past 3 years. As you can see, from 2009 to 2010, your total fund balance increased around $580,000. And this was because our expenditures that occurred during the year were less than what you budgeted by 8%. Now if we look at our total unreserved fund balance, this is, you take your total fund balance less what has been reserved, you have your total unreserved fund balance. Now this has decreased to $500,000, and this is because our reserved amounts, which are required to be reserved by outside parties, increased, specifically the state statute increased in the current year. And this gives you a listing of your total fund balance with all the categories, comparing prior year to our current year, and this just kind of gives you some numbers for the slides that we looked at previously.
If I might ask, on our previous slide, you said there was a state mandated increase in what's required to be look like that on the about 50%.
And that's because it's your state statute, which is a calculation, and what you do is it's your accounts receivable, last year deferred revenues, which is your unearned revenues, and that's what's reserved, and your accounts receivable this year because of grant, which is what makes that formula total. Here we look at our unreserved, undesignated fund balance as a percentage of your general fund expenditures. It was 33.8% last year and 34.7% this year, so we increased just under 1%.
Evan, if you could help me on that previous one, it was 33,934, that's slated drop a good bit. And a lot of it, I think, is then we have some expenditures that's going to put in the second half of this year on the 2,000, or the next year is not going to be 34%.
Yeah, we get huge debt service at the end of the year, we change the percentage, but one of the differences here in what we used to is that the calculation of this percentage is that this is a percentage of the 2010 expenditures. What you use for your policy, the policy that more than is 25% of the New Year's budget.
Right.
So you want to reserve and unreserve 25% of your current year's budget, which makes that an entirely different.
Right.
So the number
And
could
the number's
be,
small.
yeah, the number's
Number's
smaller,
gonna be
but the
small,
percentage is great.
But it is great.
If we look at some detail of your revenues, this slide shows us our top three revenues in your general fund, local option sales tax, restricted and intergovernmental, and ad valorem taxes. I'm going to look at those in detail. Your ad valorem taxes increased about 1.5%, and this was just due to normal growth. There was no tax rate increase. Your restricted intergovernmental revenues increased a little over 2%, or decreased, I'm sorry, a little over 2%, and this was because of a decrease in ABC revenues, and also the local health and social services revenues decreased a bit. Local option sales tax. Your local option sales tax decreased 15%, or a little over $1 million, and this is because of the Medicaid swap, and also because of the decline in the economy. And I know this is a large percent, it's a lot of money, we've seen this across the state.
How much was due to the economy? In other words, on the Medicaid swap, we got something in exchange for that. So what was the actual decrease in sales taxes, excluding the Medicaid swap?
I don't have that number, but comparing these 2 years, the Medicaid portion was not as much as it was in the prior year because we only had, I think, one quarter of Article 44, I think. So most of this is economy. There's a little bit that does have to do with Medicaid, but not nearly as much as the prior year.
Yeah, when we compare 2010 to 2011 next year, that will be strictly due to this.
We got September's check here. What do you just say?
Yes.
Is
Yes.
it
It's still less than last year's.
less
So
than
half a
that?
cent?
Yes.
Did they take a half a cent or a quarter cent of Medicaid?
Half a cent.
That's a half.
Article 44 was a half cent.
Half cent.
And took it out in phases, and this past October
It's the last.
was the last phase, and so after that, we got no more Article 44. The other thing that helped us a little bit sales tax, though, was the fact that they changed Article 42 to the point of auction versus statewide. Actually, we came out ahead on that one. We've still been on statewide basis, Article 42 is the lower.
Okay.
Then we show our top three expenditures for your general fund, which is public safety, human services, and education. Your general government expenditures decreased less than 1% this year, and this was mainly due to budget cuts related to the economy. Your public safety expenditures decreased 3%, and this was mainly due to a decrease in salaries and benefits in the department.
Salaries and benefits, also, that part means they have less employees, right?
Correct. Education expenditures increased 2%, and this was mainly due to an increase in the current year public school expenditures. And our human services expenditures, those decreased around 10%, and this is mainly due because the Medicaid vendor payments decreased $700,000 because of the Medicaid swap that we talked about, and also our social work and special program expenditures decreased almost $100,000. If we look, we're just going to look at the enterprise fund for a few slides here. This slide compares our cash, our net income, our GAAP net income, and our cash basis net income from 2009 to 2010. Your cash and GAAP net income has a slight increase in the prior year. Our cash basis net income decreased for almost 70%, and this was mainly due to an increase in tipping fees in 2009 that we did not have in 2010. And that's because of the Highlands Transfer Station that was built in 2010. This slide shows us your required debt service, your cash flow from operations, and your unrestricted net assets for your solid waste fund for 2009 and 2010. Your cash flow from operations decreased due to a decrease in cash from customers. And again, this was because of tipping fees from Highlands Transfer Station that was in 2009 and not today. One other thing I wanted to mention is there is a new GASB coming out that is will change, the accounting standards change, that will change the way you report special revenue funds and the way your fund balance is reported. And we're going to work closely with Evelyn, look at your fund balance structure, and look at this new GASB, and we'll be in touch with her on any changes that we need to make. Basically, they tried to take fund balance and make it easier to understand. I don't know if that's really the case, because what has happened. So we will not have unrestricted or reserved, unreserved, and restricted. That terminology has changed. So there may be some items that we have board reserved right now that they're just going to show up a little bit differently. So I'm going to work with them.
Who initiated that change?
That's through the GASB, Government Standards Board.
I guess
So,
nationwide, everywhere.
yes. I don't know that it makes things easier or harder, but we'll work, like I said, with everyone and help to educate you on those changes. And basically, the presentation of your fund balance is going to be a little different on your statement next year.
But it is primarily just wording.
Yes,
There's
terminology.
a little bit of fluctuation in how we report, but most of it is just mentioned.
So you have to go back and restructure everything we do.
And so we still have three basic categories.
In fact, I think we have five.
There's 5.
There will be 5, but we'll work through that and figure out which ones that you guys are used to seeing and what you called it before and how that compares to the new method.
We get definitions of each one of those 5 categories and help you out with that, because some of it can be confusing.
Help us stay confused.
Any questions from the board?
Thank you.
Ms. Brown, we thank you. And how many counties are you, as Martin Starnes does in North Carolina, do you know?
I believe we have around 28 now.
I know you can't tell me how we compare to other counties, but in comparison to other counties, how do you think we're doing?
Well, it's hard to compare to other counties because every county is different, and a lot of people ask the question on how does our fund balance compare to other counties, and the answer really is it depends on your board policy and where you want your fund balance to be, because the county next door could have a much higher fund balance, and that may be because they're building up money for a new project, or they could have a much lower fund balance because they just did a huge project that they used that for. So I think you're within your board policy. You had a good year, especially considering the economy.
We think so too. And that's thanks to the citizens and for paying their taxes. That's what really matters. So we appreciate it.
There's one point that I would like to make, and it has to do with